Yes, welcome everyone to this CFI Financial Inclusion Week regional plenary session, exploring how data-driven technologies will impact on financial inclusion efforts in Africa. My name is David Saunders. I'm Impact and Partnership Leads at Senfree, and I'll be your facilitator for today's session. I'm joined by Shamir Ahmad, Senior Economist at Research ICT Africa, Selena Lee, CEO and co-founder of Zindi, and Fiacre Mushamiri, Digital Transformation and Policy Lead at Senfree. Before we kick off the discussions, I'd like to make two requests to everybody to aim to make this session more interactive. The first is to kindly complete the poll that we have shared to get your input on the foundations necessary for financial inclusion in Africa to benefit from data-driven technologies like artificial intelligence. We've already received more than 30 votes in our pre-event sharing on social media, so we hope we can add to this through today's session. And just before we kick off, I'll give you a quick feedback from social media in terms of what the key issues identified were, and then we can come back to this at the end of the session to see what you've all added. The second request that I have is you'll see that in the interactive comments box, there's a section for questions. Please do share questions. We want to make this session as interactive as possible, and I will look at how I can integrate these throughout the session rather than only coming back to them at the end. So for a bit of further background to this session, I just want to paint some context. It's really informed by by the work that Research ICT Africa has been doing on artificial intelligence in fintech ecosystems in Africa. We've then invited Zindi, who can provide their on-the-ground experience working with data scientists across the continent, particularly looking at how data is being deployed in AI models to support financial inclusion. And then we'll also be drawing on Senfree's work with GIZ and the MasterCard Foundation on exploring the potential of good data governance to support digital financial services, with a specific focus on the work that we've been doing in Rwanda. So from the poll that we submitted before this event that we shared on social media, what was really interesting was that it highlighted that the key issue for overwhelmingly was really around data protection and privacy as for building the foundations for the application of data-driven technologies in Africa. And that's something that we'll dive into a bit, particularly with Fiacre later in today's session. What followed quite closely behind was local skills. So the local capacity and local skills, particularly around data science, but also in the development and deployment of these models as well. Interestingly, the ecosystem's AI governance and regulation were actually quite far behind. And it may come out in today's session that that's because we're still only at the beginning stages of AI innovation, and we rather want to see about how we get those foundations right before we start over-regulating it too much. So let's see how this holds up in the discussion today. One of the things that I also would ask you as participants to be on the lookout for is something that came up in our pre-panel discussions, really on the theme of representation. Is there issues in representation in the data that is used for data-driven models, in the data science communities that are developing these models, in the ecosystems where these models are being deployed, in the products and policies that are being developed, and last, in the groups that are shaping the governance around these models. So with that, I would like to ask Shamira to take over and get us started by framing the discussion around the enablers and safeguards that are required for responsible data use and deployment of beneficial artificial intelligence in the African financial services ecosystem. Thanks, Shamira.
Thanks, David. Before I highlight the enablers and safeguards for responsible data use and beneficial AI deployment, in the African context, we all know we have multi-dimensional digital inequality and structural economic deficits that create supply-side and demand-side barriers for digital financial inclusion. So getting the fundamentals right is key for inclusive, interoperable, and fair data ecosystem. And this means addressing things like demand-side barriers that hinder universal access to and frequent use of transaction accounts. You need to address universal broadband access issues, and you need to encourage meaningful connectivity to reap network and scale effects from the internet and the broader digital economy. So in order to address these barriers that actually hinder meaningful digital financial inclusion uptake. You need to address demand side barriers, and this will require closing the digital divide and understanding financial inclusion barriers. And one way this can be done is by collecting data to understand the demand side constraints and issues on the ground that impact uptake to create contextually relevant evidence-based policies and solutions. And one way this can be done is through collecting data using demand side surveys, such as the World Bank's Findex and RIA's After Access survey. And then from the supply side, addressing market structure reform for affordable quality internet enabled devices and connectivity is crucial. And you also need funding not only for domestic and regional investments in financial infrastructure, but you also need investments in soft and hard digital infrastructure, such as sustainable, reliable energy sources and data infrastructure. And lastly, you also need responsible deployment of interoperable digital or biometric identity systems. So these prerequisites need to be addressed in a mutually reinforcing manner, and they need to be done concurrently with facilitation of the four broad enablers for responsible data and AI use. So the first enabler would be a trusted, secure, and high quality data systems and data infrastructure, such as technology for processing data and storing data. For example, cloud platforms. You need technology for developing AI. You need infrastructure for AI and microservices such as APIs. And the second enabler is, like you highlighted, human capital for AI related skills to create value from data in a responsible manner. And this is not only limited to technical AI related expertise, such as data science skills, but it also requires data and algorithmic governance. You also need institutions that encourage governance that supports the fair and equitable leveraging of technology. And this will require an agile and adaptive regulatory and legal environment that facilitates trusted, secure, and interoperable data ecosystems. And this is crucial if we want more inclusive, wider data use and access in a manner that respects individual privacy and that can potentially drive inclusive innovation and digital entrepreneurship. And then lastly, multi-stakeholder partnerships are necessary, and these should be done domestically, within sectors, and internationally. And some of these collaborations that are crucial are research and innovation collaborations in terms of the financial services sector, Basel III arrangements, harmonization of standards for data quality, auditing, and accounting purposes. You also need multi-stakeholder partnerships for cross-border data flows, and also to address overlapping policy issues that arise in data-driven economies, such as taxation, consumer protection, dominance, and market structure deficiencies. And then lastly, in terms of safeguards for data and AI, creating safeguards to ensure people have trust and agency in the data ecosystem not only requires robust and integrated data governance practices around things like data security, data harmonization, and data privacy, and also algorithmic governance. But it is a multi-stakeholder effort where the right mix of laws and policies, institutional arrangements, and infrastructure and technical architecture is sufficiently available and relevant to facilitate a country's context and create a data sharing environment in which transactions between data providers or data subjects and data users are made in a trusted, fair, and responsible manner. So essentially, creating safeguards to reap value from data and AI while upholding individual rights are not mutually exclusive and should be done in parallel with addressing the prerequisites and fundamentals. And facilitation of enablers for responsible data sharing and AI deployment. And this should be done in the context of considering political economy dynamics and existing endowments of the local ecosystems where AI is being deployed.
Thanks, Shamira. I think there's quite a lot in there that we want to unpack through the rest of the session. I mean, maybe just three of the big takeaways from my side from that is the need for skills and infrastructure to support innovation with data-driven technologies, the trust in the ecosystem, and I think that's particularly something we can speak to around the building blocks for good governance. And then this last bit around how do we empower customers as well to have ownership and rights over their data so that they can really benefit from it. So I think as now what we can ask Selena from Zindi to provide is a bit more insight into what innovations are currently taking place on the continent as it relates to AI and data-driven technologies and financial inclusion. And what are some of the positive use cases that we see emerging that can really support financial inclusion? So Selena, may I hand over to you?
Sure, thank you. Yeah, it's a pleasure to be here. I'm Selena, and I'm the CEO of Zindi. And just by way of background, Zindi is a data science solutions and talent marketplace for the African market. We host a community of over 30,000 data scientists from the African continent that are honing their skills and building their skills and solving real world problems for real companies across the continent. So in terms of how we see real life, what does AI look like on the ground in Africa? I think the first point to make is that AI is still definitely in its early days in Africa. It's still a new field. If you look at starting from the universities and the education systems, we see that there's only a handful of programs on the continent. And I think that starts to reflect as you go into the industry and see what the state of, I guess, sophistication AI use cases are on the continent, but it's definitely getting there, and there's definitely a huge movement and growing interest in this area, and a lot of companies are starting to do really interesting things, and that's something that I do want to highlight. And the other thing that I want to highlight is that when we talk about AI, if we can get away from kind of the buzzy excitement about that term AI, it's good to take a step back and recognize that AI as a blanket term, depending on who you're talking to, can actually encompass a really broad range of data use cases, everything from pretty basic, simple, predictive analytics all the way to more complex like computer vision and chatbots and things like that. So that's just something I want to recognize. And that also the power of data is not only in AI, but there's a lot of interesting data use cases that even sit outside of the AI domain, let's say. So that's also something important to recognize. In terms of some of the things that we've seen at Zindi, some of the use cases of AI for financial inclusion, I think, the first bucket of use cases that I see are the use cases that essentially do some of the things that financial service providers and fintechs need to do, but that they're doing it in more effective, more efficient, more accurate ways through AI. So that can be things like credit scoring, insurance risk prediction, even cross-selling products, things that maybe financial service providers have always been doing, but now they're able to tap into different sets of data, social media data, other alternative sets of data to build more accurate models. And then there's also, then on the other hand, you see the more typical, what you would consider AI use cases where you're thinking about chatbots and automatic speech recognition and computer vision, where you see applications like, facial recognition for verifying IDs, or automatic speech recognition in local African languages so that they can so that financial service providers can extend their services to, to people who are maybe not able to read and write, or people who only speak that local language. Through AI, we're able to access or provide services to a whole new market in ways that was never possible before. So I think in conclusion, I would just say that, where I see AI adding a lot of value in financial inclusion is in the ways that it is able to lower the risks, lower the costs, kind of lower the cost of financial service providers providing services to populations that maybe would have been low access or low data before. And also creating new efficiencies where it wasn't possible before. So it actually allows financial services providers to potentially lower their own costs, lower the cost to the clients. And also there's a lot of use cases where they're getting new insights into their clients that they didn't have access to before, which means that they're able to better serve them and enhance the client centricity of their products and services.
Thanks, Lena. That's really interesting, and I hope there are some questions to probe some of those use cases further coming from the audience, because I think while there are some really, as you said, some really interesting examples of how artificial intelligence is already helping to do things that are currently done in the financial services industry, like credit scoring, insurance risk prediction, cross-selling products. There's some really interesting new opportunities for AI, I think particularly around the way that it can change the interaction that consumers have with financial services, particularly around language. So I hope there's some questions and opportunities to come back and explore that. Fiarca, I think what Selena has presented is some interesting innovations that have the potential to advance financial inclusion or already advancing financial inclusion. So how do we ensure that we leverage these use cases and this ecosystem grows in ways that helps us to build trust with users and consumers and helps to safeguard data? If you're, from the perspective of the regulators, those responsible for governing this space, how do you start to think about it?
Yeah, thank you, David. You're very right. One of the key challenges we've seen actually with the adoption of any technology on any market is enabling regulations. And you can't have enabling regulations, especially for this particular use case of using artificial intelligence, when you don't have proper rules and roles and do's and don'ts for the businesses, but also for the consumers to be protected. They need to understand what their rights are, their claims. And when this environment is non-existent, it becomes a barrier of entry for the businesses. And it doesn't promote trust by the public. So what is needed, first of all, is for our African countries to put in place the required legislative instruments in place. So I'm talking about data protection laws, the guidelines on how data is accessed, how it's shared, how it's anonymized, the proper obligations and requirements for citizens, right to consent. While these instruments are being put in place, proper consultations need to be done, both by the industry, academia, and the public. Let them have a say in what they think should be their rights. This has been such a major issue that I'll give a few examples that in my own country we're dealing with. Without proper frameworks in place on the regulatory side, we've seen actually AI companies hesitating to even venture into this business because they know if they do this, tomorrow they might be slapped with a fine, depending on a particular public outcry. But however, this also is creating a major gap. It's preventing our own industries, our AI industry, to grow, while at the same time we're feeding the multitude of all the available data sets to the major corporations, the Facebooks and the Google. They're not obliged to comply by the same rules, and they're using the same data to train the AI models to become better and efficient at the services that are providing to our citizens. So the proper engine of growth and as an incentive for businesses is the requirements, and this should be the same for all the nations to have in place rules and regulations that are very clear on how data is accessed, how it is created, how it is processed, and how it is disposed of. These regulations are mandatory for all the nations to have. The second thing is to discuss about a harmonization framework. For example, Shamila said we need to have free movement of people and free movement of data. But if you're trying to have individual and businesses that operate across the entire continent, it is going to become extremely hard if the requirements in country A and country B and country C are very different. Scaling up becomes very, very hard. So we also need to have coordination on this framework, to have agreed upon rules and to standardize the procedures across the nations. This enables businesses to scale, and they enable ease of monitoring because the requirements are the same across the entire market. So for me, definitely the mandate to put in place enabling regulations, enabling legislation, whether it's laws and policies, is a prerequisite for the existing of this industry.
Thanks, Fiarca. So I think what's really interesting there is it's not just around the safeguarding the risks for the consumers, but also creating the enabling environment for businesses to innovate around artificial intelligence, and particularly creating some type of regulatory structure that can give them certainty that they can use artificial intelligence and data in certain ways. Before we go on to the next kind of section of the the session, where we'll look a little bit more deeply in terms of the risk, harms, and opportunities, there's two questions from the audience that I wanted just to bring in now. The first one I think is for Selena or for Fiarca. It's about the availability of data sets in local African languages. Is there data available to develop natural language processing solutions? Selena, Fiarca, Selena, do you want to go first, then Fiarca after?
Sure, yeah. That's so exciting that this was brought up, because at Zindi, that is NLP in local African languages is something that we have been working on quite a bit. We've run a couple of challenges on the platform for data collection in the first instance. So calling on the community of African data scientists across the continent to collect NLP data sets, or data sets that are ready to train NLP models on, was one set of I guess calls to the community that we did last year, which resulted in about 30 new data sets on underrepresented languages. And then we've also run a whole series, about 10 different challenges using those data sets to build the models. And so we have sentiment analysis models, we have machine translation models, we have automatic speech recognition models. And I know that there was a question about Mozilla Common Voice. We actually right now on Zindi have a open competition for Luganda, the Luganda data set, which was a data set collected by Mozilla Common Voice. So this is in partnership with Mozilla. So it's a really exciting initiative. It's a good question. And it's something that I would say that what I see on the ground is that there's tremendous interest in it. And essentially it's because of the end use cases. I've talked to a number of startup companies that are interested in these models in order to integrate into the services that they use.
Before handing over to Fiarca, Selena, can you just, what is an example of one of the use cases that NLP or MPL can be used, NLP solutions can be used for in terms of financial inclusion?
Well, I'll give you examples that I've heard of for startups, but I think it's very easy to translate that into the fintech startup world. So, I mean, one was for one of our partners is a startup working with transport, and so the idea was to help people find the right buses, know what bus they're on, and things like that. And they could ask questions to this app. And so that way they could talk in their local language and get information about what transportation they should be taking and what they're on. And then there was another company that I was speaking to that was like an Uber for tractors. And the same, where a lot of farmers only speak their local languages, maybe don't have smartphones, maybe just to ask for a tractor and give their basic information. And so using NLP or using automatic speech recognition in local languages would help a lot. So I would say in the fintech world, it's a similar principle where, you're trying to provide services maybe to people who maybe don't have smartphones, don't have apps, maybe only speak the local languages, and you want to be able to offer the service and give outputs and inputs back in a way that people can find accessible.
It sounds like it could be a big game changer in digital literacy, which has often been one of the challenges in terms of creating trusts. So Fiarca, I also saw that from the chat that you you guys have worked with the Mozilla Foundation on Common Voices in Rwanda as well. How have you guys used that?
Yeah, so thank you, David. This is actually, as I said, this is exactly where you see that there's a need for the government to be involved. The government of Rwanda, we worked with Mozilla to actually avail the second largest data sets of open language on the Mozilla Common Voice platform. Again, this was done because it was an initiative of the government. We understood the value that this have on enabling people, as Selena said, people who can't see, for example, because of the disability, people who can't read because access to a specific language is a barrier. And this was done because we understood that if you avail this tool, then compliance and accessibility becomes open for any service provider. Then we can make it mandatory. Every time there's anyone that is developing an application, if it is in a fintech application, now you no longer have an excuse because we already cut the cost of developing the technology ahead of time. And this is all possible when you put in place supportive policy instruments. So our country has said that accessibility means everyone have to have access to these things. So if this accessibility requirement, the compliance of accessibility requirement is a barrier, then the technologies themselves suffer. The providers of the technology suffer because if you're telling them, no, your application has to be accessible by everyone at all time, and they understand that for them to be able to do this, language is one of the key biggest barrier. Then you get very little interest in the people that are willing. Only there are people with funds to develop the technologies again to come and enter your markets. But when you open this kind of data sets to everyone to use, then it becomes an ubiquitous tool that anyone, businesses, government, private entity, academia, anyone can start playing around with it. And then we see more model, people start improving depending on what they're seeing in other services. Some of them become pioneer, they own this, they have it as a service that you can rent through API, as Shamira was saying. So we see also a whole set of a new industry that emerge from this fact that you've enabled these data sets to be accessible. So our countries need to take a lead to digitize our languages, to make them machine understandable. And especially that if you look in terms of languages, the content have a lot of languages. But if you look in terms of the internet and the content that exists, our languages are just not featured. They don't exist there. So it then is where I agree with Selena. We need to push our own communities. We need to own this process, make our governments open these data sets, encourage our own people to try and learn. Instead of training these people on NLP models in English, then our own AI industry can also start from there itself. We actually have a whole new set of a new market that is open to our citizens that could enable the majority of our own citizens, but also is a potential market for our AI industries as well. Now, vis-a-vis financial inclusion, as I was saying, we have to start discussing about access to people with disabilities. If you can't see and you're accessing a technology tool on your mobile phone or on a computer, then you have very limited options. And this is a very big problem. We have an aging population as well. I know it's not as big an issue as the rest of the world, but we're getting there very soon. So we need to start working on these solutions ahead of time.
Thanks, Vic. I mean, I think it's really interesting that we're, I think some of the conversations you usually think about with AI and financial inclusion are around, like we said, credit scoring, being able to prevent fraud. But I think there's a new generation of applications coming out that can really change the game for expanding these services to more people. And I think this is a really exciting use case around artificial intelligence and the way that it can overcome some of the language barriers that we previously had to engage with digital financial services. I think one of the other questions that I think, so I think that's really interesting in terms of our theme around representation as well. One of the other questions that has come up from the audience, which has to do with data ownership, and I think this gets at some of the points, Verka, you and Shamira were making. And it's actually something I know we've recently spoken about in terms of Rwanda's new data protection law around data portability. So the question is, once captured, are data owned or controlled by financial companies? Are there any standards regulating the ownership of data for inclusive finance? And when data are shared among parties, are data sold or data exchanged with other returns than monetary values? So if I can maybe ask you to answer the first part of the question around the data owned or controlled and the standards. And then Shamir, I think this gets to some of the questions around data as an infrastructure or an input into the broader fintech ecosystem as well, around sharing amongst parties, how it's sold or how it's exchanged.
Yeah, thank you, David. This is actually a very good question, and it's going to reflect a bit how every nation's approach this. In Rwanda specifically, any personal data collected about an individual is that individual's property. So basically what this means, if there's a particular business that is collecting information about you, this information is your property. They're just, because the technology doesn't exist yet where you can personally have it, it is being hosted on the premise of this business for the reason that they are collecting it. So if it is a financial institution and they need this enabled to in order to do transactions, yes, it is your data that they're using to provide your service. So there's definitely parts that belong to you and the parts that belong to the business for it to be able to run operations. So when it comes to this issue of data ownership, it's such a big issue, and it's where really we want to encourage discussions and to understand, because on one hand, I can definitely see value in this data belonging to the individual, especially now that data is being monetized. And eventually, if your data is being monetized, we also were working on putting in place a regulatory framework so that the dividends are shared to the data custodian. A key example we've done here is within the mobile money data set that we already have. When it is being used by a third party, some of the revenues are shared back with all the users. So if, for example, it is being used for credit scoring at the end of the year, the company that does collect all these data sets on the key people, it's run this on, a small portion of the revenues is shared with them. It's almost insignificant, but we did this to encourage business starting to think about someone's data that they're using in order of their business. And if we're saying people have the right to opt out for their data to be processed, we also wanted to enable individual, to give them the right to be able to opt in if in turn they could get monetary benefits. We want to not limit these monetary benefits to the businesses only. We want them to recognize that it is by the will of the people whose data they are processing that they're able to make money. So that is the Rwanda's approach. I don't know if the same model exists in other countries, but one thing I want to highlight is that it is it's almost impossible for us to check on the regulatory side because the majority of these transactions happen in a black box in a business somewhere. However, as a rule, it is just established in our laws and regulations. But we don't think that for now, we do have the technology to monitor the enforcement. But as a principle, it is there. So that is how we have decided to approach this. It is extremely hard for us to enforce, but it is being established as the de facto principle. So eventually, when technologies advance and individuals are able to claim their own rights, we shall see how enforcement can be done. But on the other hand, it's generally done to make the businesses take responsibility, take ownership, and understand that they're benefiting from processing other people's data, and these people are owed something.
I think that's really interesting. And I mean, I know that as well, there's increasing focus amongst regulators on data portability and the ability for people to take more ownership and control over their data and move it from one financial service provider to another. And it's really interesting the way that Rwanda is almost also looking at how people can be further empowered to actually earn income or generate some type of additional revenue from their data as well. So it gets to this theme around how are we empowering people to have more ownership and benefit more from the data that's being used in these models or driving advances in financial services. Shamir, what have you guys seen from your work in terms of how data is being shared among parties and what are the different ways that it's being done? And I think the question is quite interesting around what's it basically costing? Is it being sold across different providers as well?
So for me, with most of the questions that you've raised, I think the most important thing is understanding how value is created from data. So understanding how value is created from data, which is repurposing, combining, and reusing anonymized data that respects the privacy of individuals is crucial. And in terms of ownership of data, it needs to be balanced by economic priorities that are relevant for a country's context. Um, every country has the autonomy to choose what data protection or governance model they will choose, but that has to be also informed by economic implications. For example, you can have a stricter data governance regime, such as China, something in the middle, just such as the GDPR, for example, or something that just encourages free flows of cross-border data and domestic data, such as the US regime. So with all of those regimes, you need to understand the pros and cons of each model. And as Fiacre mentioned, compliance and enforcement of regulation of those, especially for developed countries and African countries that have very nascent or limited data protection regimes. You need to understand all those factors in deciding which data governance model in terms of ownership and in terms of creating an environment where data can be shared and open, like for example, open banking systems require regulation to ensure that traditional financial institutions and mobile network operators that have large amounts of data that are kept in silos are shared and accessible for example, fintechs or other service providers that can create innovations for financial innovations for financial inclusion. So you need regulation for interoperable enabling environment. And also global discussions on, especially Fiacre method, cross-border data, regional harmonization, standardization of data quality, and technical standards of data. And these are not only done at a national level or a domestic level. They are global organizations that govern these factors. So it needs, I think the most important thing, like I said, is just understanding how value is created for data and balancing the trade-offs between data governance and data justice with economic priorities that are relevant for your country context.
Thanks, Shamir. So I think oh, there's some back. Shamir, if you just want to put your comments quickly. Okay. So I think I think there's some really interesting discussions around data ownership and data empowerment as a key foundation for how data and data-driven technologies can benefit financial inclusion in Africa. I thank so much for the questions we received so far. Please do continue to send them through. Narita, we'll come back to your question in just a moment around data belonging to individuals versus the company. I just wanted to shift gears quickly around the opportunities and risks that we currently see in the fintech and financial inclusion ecosystem around data and data-driven technologies. Shamir, I know that you've done quite a bit of research on this, and one of the things that we found interesting from our pre-panel discussions were around the representation in the fintech ecosystem, particularly around the kind of bro culture. And I just want you kind of to expand on that and why you think that that's currently a risk for the ecosystem, the fintech ecosystem, and particularly how data and data-driven technologies like artificial intelligence are being deployed in financial inclusion.
Oh, sorry, I lost the mute button. Thanks, David. So I think this just builds on your question about representation. The risks are, in terms of AI in general, there are weak algorithmic transparency and explainability, data limitations, biased data sets, as Fiacre mentioned, and poorly designed algorithms that impact AI risks. And in terms of the key risk that feeds into representation is that AI is currently being deployed in inequitable financial services ecosystems, like you mentioned, the tech bro culture. And these are systemic multi-dimensional inequality hurdles that negatively impact women's livelihoods. So in the fintech ecosystem, there's supply side and demand side dynamics that perpetuate gender disparity. So for example, there's a gender digital divide, there's a gender division of labor where there's some kind of roles, especially in like STEM skills and in AI related careers, where only men are expected to be capable of, for example, becoming a data scientist or a data engineer. There's also a gender disparity in the STEM workforce, which impacts the pipeline and participation. And all of these inhibit women's participation in digital entrepreneurship. They also impact women's representation in public and private sector leadership, and also basically impact different points of the, for example, the fintech ecosystem. And these ultimately impact women's ability to be users of financial innovations and services, because they're not a segment that is being catered to. Solutions aren't tailored to them because there's gaps in data. The culture doesn't support women in these type of spaces. And especially this is worrying because AI is likely to adopt or exacerbate existing bias and discrimination in these ecosystems. So there needs to be concerted multi-stakeholder and mutually reinforcing cross-policy intervention from like educational reform, reskilling, ensuring that there's gender diversity in AI-related workforces, to ensure that there's more efforts to include women, youth, and other marginalized groups in more economically productive sectors. and though I've highlighted women need to be included, and other marginalized groups, such as the youth, need to be included in like the emerging data-driven digital economy. The problem with Africa is that these are also widespread. Like we have generally limited AI talent, and our educational systems from like a basic education level don't support the kind of workforce of the future for the 21st century. So everything needs to be done in correlation, and it needs to be mutually reinforcing. Everyone is disadvantaged, but there are more people who are disadvantaged than others, such as women and the youth.
Thanks so much, Shamira. There's two things from that I think are really interesting. I want to take one to Selena first, and then to Fjarka after. So Selena, you work on the ground with 30,000 data scientists across the continent. How do you find representation plays out there? So Shamira's both raised the concern about the overall skills on the continent, but also the representation on who's involved in the data science community.
Yeah, actually, one of our values as a company is diversity and inclusion. So it's something that we've thought about a lot and that we're conscious of. We're a pretty diverse platform. We have 45 out of the 54 countries in Africa represented. In terms of gender representation, we're at 25% female participation on the platform, which is higher than the global average, but still not good enough. Until we get to 50%, we're not where we need to be, right? So it's definitely something that we are conscious of. We've made concerted efforts by doing like certain projects that were specifically for the women on the platform. We also did a mentorship program where senior women on Zindi could mentor junior women on Zindi, and that went really well. So I think we've been conscious of it and kind of playing around with ways that we could introduce more inclusion into the data science ecosystem that's on Zindi, and I guess as a consequence on the continent.
So, I mean, Selena and Shamira, what are some of the risks about us being underrepresented in terms of local talent and talent from women and marginalized groups for financial inclusion? Shamira, I don't know if you want to go first. Selena, yeah, you go first, and then Shamira after. Thanks.
Okay, sure. I mean, there's so much talk right now about ethical AI, and Shamira highlighted a few of these issues. So the thing that I've seen with through my work with Zindi, and what I really believe to be true, is that in order for AI to live up to its potential, to actually come to fruition with these solutions that actually impact people's lives for the better, you need to make sure that the people's lives who are being impacted are also represented in every step of the value chain of that data, from the data collection all the way to creating the solutions and deploying them. So the people who are collecting the data, the people who are building the models, the people who are designing the solutions, and then the people who are sitting in the boardrooms. And it's because of problems like, there's been a lot of case studies or examples of where, women aren't getting access to credit, for example, because of the models that were built. And, if there were more women at the table at the time, they would have a higher level of awareness or to these, these potential biases in the models. And the problem is that machine learning and AI models basically replicate what a human did, right? You get the data from somewhere, and that data comes from, so for the credit scoring, the data comes from the way humans have evaluated credit applications. And so when you build a model on that same model, on the same data, you're replicating the biases. Same with, when AWS was hiring engineers and their algorithms were not hiring women. And it's, so it takes a lot of sensitivity to what's going on at all levels. And then also the other thing is that what I wanted to highlight is some of those AI solutions are off the shelf. So like the facial recognition models, the sentiment analysis models, those are off the shelf. And the same, that's also going to be inherently biased by the data that it was built on. So there was also a lot of, news about the facial recognition models not working very well on people of color, on women. So I think that, there's a lot of risks in terms of the harm that these models can do. In the best case, people will just stop ignoring the models, which I've seen happen in the African context, where some of these off-the-shelf models just were not working, so people ignore them. But then in the worst case, they can actually do a lot of harm to real people on the ground.
Yeah, thanks, Selena. I think those are really illustrative. Shamir, I'm going to come back to you. I just want to pick up one thing that Selena said as well, around how this can potentially, the representation of people in the actual models and the development of the products. But one of the things that we picked up in the pre-panel discussions as well, Fiarca, with you, was people not being included in the data that's being used for these policies and products. So I think you used the example in Rwanda that if you guys want to develop data-driven financial inclusion policies, you need data on all the people that would benefit from financial inclusion, which currently isn't present. Can you expand just how you think some of these underlying data sets can either support or actually get in the way of driving more inclusive financial policies?
The question is for Shamira, right?
No, it's for you, Fiarca.
Oh.
But Shamira can also cover it after. Thanks.
Yeah, you're very right. I think primarily we have to, again, you look at, we're all discussing about data-driven AI, but what data is there, right? The data that exists, first of all, informs the services that we're deploying. And we have also to consider whose data is in the system. And I think this really matters a lot, because if you're using your AI models to create, I don't know, let's say customer segmentation, or you want to tune a specific product for a specific group, we have to not ignore a question that Shamir raised. We're only considering the people that are visible in our ecosystems. But there's a very big portion of the people that are not represented. So these are the people that don't have those tools that generate that data that you're discussing. These are people that don't have the network. Even if you give them the tools, the infrastructure is non-existent. This is also talks to the issue that Selena was discussing about why some of these models don't work specifically to specific groups of people. Women, for example, if you collect only data about men, because maybe in a particular market, due to selective socioeconomic pressures, men are more likely to have data sets or handle for cultural reasons, then you're ignoring that there's a very large segment of the population that is underrepresented in these data sets. So this is really a very big thing that we need to take into considerations when we're designing these products, because they will shape. And remember, this is just a machine. If you don't fit into the model, you just be an outlier. But the truth is that given the penetrations of the devices on the continent, specifically, this is mostly a poor countries issue, we have a large segment of our population that is underrepresented. And this is often women, people with limited financial resources, people living in remote areas, they don't have access to the infrastructure. So if you're going to use AI to model and to inform the way you provide services without taking these outliers into considerations, and by the way, I'm calling them outliers here, but on the continent, they're actually quite a very large portion of our population. So we have to think about the impact of the services that we are doing and how these people that are actually not included, especially financially, are also being cut off, specifically because they're not represented. So I think it's a major risk, and we actually, hopefully, we can also use AI to see how to think about these outliers. Is there any other models that we can think about when you're collecting data and you're training your AI model? How do you take into considerations non-existing data sets? Because as an example, in my country, phone penetration is really a lot. More than 90% of the adult population have phones. But if you turn this around and you say, oh, no, we want to see how many have smartphones, then that number only becomes 20%. So if you have an AI that you're training on the 20% of the population, you're completely ignoring 80% of the population. It will be underrepresented in these data sets. And you won't take all the decisions based on only 20% of the population. If you want to be truly representative, and if you want to enable the actual individual that needs to be financially included, often it's those 80% that don't have those devices. And it's maybe where we need to focus our shift. So I don't know if that helps, but Shamila can complement what I said.
Hi. I think both Selena and Fiacre captured the issues that because of the digital divide, you don't have data subjects that are necessary to have machine readable data to create innovations, and you don't have people in these ecosystems who are creating contextually relevant products and services. So it just boils down to representation, and it's also from at different levels of the data value chain and in the data ecosystem, from like data subjects to data analysts, people who use data, to the governance and legislation. You need leadership, and Selena actually highlighted that you also need female leadership in like regulators and financial boards in key decision-making areas, to make sure that there's an ecosystem where underrepresented people are represented.
Thanks, Shreya. And I think so. We're coming to the end of the session, and there is a couple questions that I just wanted to come back to, and then just reveal the results of the final poll. I thought what was really interesting from this session was the new potential uses for data-driven technologies like artificial intelligence to address some of the barriers to financial inclusion and access to inclusive financial services. But at the same time, the challenges that we still have in terms of the underlying data in terms of how people are represented, the representatives in developing the models as well, and the overall representative of the ecosystems that are deploying these. And I think one of the things that has really stood out, it sounds like from the questions, is this issue around making data work for people so that it can really be leveraged effectively in data-driven technologies. The first question we looked at was data ownership, but there's another question here from one of the participants as well, which is, in many cases, MFIs are either unable or unwilling to actually share aggregated data. This is also the case in with a lot of regulatory bodies as well. This makes it quite hard for us to get comprehensive, accurate, up-to-date data. And they're wondering if there's any examples of almost innovative ways of pulling data together to create more comprehensive pictures of what's happening across a population that can be used to inform better policies around financial inclusion. Fiarka, I know this is something we're working on in Rwanda. So do you have any examples, in a few words, some examples of these innovations? The example they have here is financial institution data plus crop data plus M&O data. I don't know how you guys there. How are we thinking about it? How are you thinking about it in Rwanda?
So this would be a very lengthy discussion, as you said, but we already have something in place. But it's between the regulatory agencies and the policymakers. So we have a platform that enables us to share information and to compare this information. So as again, David, you know this very well. We share information. We have a memorandum of understanding between the central bank and the utility regulator, and we have something called M3, which is our mobile money monitoring tool, and we compare information between the people with traditional banking systems and the mobile money data. And this basically enables us to understand the shifts where the payment industry is headed. So for example, sometimes we see that there's a drop on the transaction level from the traditional banking services, and there's an increase on the mobile money side. And but also there's services like push and pull, people exchanging money between the two platforms. So there already exists an intra-governmental data exchange portal within the government of Rwanda. We call it the ESB, the Enterprise Service Bus. Specifically, this is limited only to the government agencies. So our regulator, the Capital Market Authority, the Central Bank, the Utility Regulator, the Rwanda Information Society Authority, we can exchange information ourselves to assess particular impact that we have toward achieving specific policy objectives. There's also another push for open data that is being pushed currently. It's not yet in place, but the framework again is on the Ministry of ICT, so we can share some resources for people that want to look into that, but it is work in progress. So we don't have something yet to share with the private sector, but once the open data portal goes out, we will share some of the information with the general public as well.
Thanks, Fiarka. I mean, I think that gets back to Shamira's point around needing leadership from governments and regulators to get this started. So we only have a couple minutes left, 2 minutes left. And I think, it's interesting is the feedback from our session and the questions align with what people have said in the poll. So the number one issue that was identified from the participants in the session was building local human capacity for AI and data value creation. I think that comes to how do we promote building the industry with on the continent. The second thing was around data governance and data protection models. So that came equal as well. And then last was around representation in data and responsible algorithms and facilitative, inclusive fintech ecosystem. So there is really this focus on building the capacity, getting the enabling environment right, and then after that, bringing in the right level of representation into the process. So I think if I can just ask you guys to go around and give your final kind of concluding statement. I think that's been all the questions. I've really enjoyed the session with all of you, and thanks for the participants for staying. So should we start with Selena this time, and then Fiarka, and then Shamira to conclude?
Yeah, I'll just say, I think to get this right, we need to prioritize supporting our next generation of African data scientists and AI professionals, and creating that pipeline, those connections to help them get into the banks and the financial service providers and support them in creating the next fintechs. But we're on a mission to do at Zindi.
Great. Fiarka.
Thank you very much. It's been very insightful to discuss with everyone and to see the response from the public. So I wanted to thank everyone very, very much. And what I wanted to close on is to encourage our government, push our leaders to put in place an enabling environment and enabling framework. If we don't, we'll just keep running into all these issues that we have with the Facebooks. It's worth having one Facebook, imagine a million of them in every single country. So we need to push our leaders to embrace this and to give us our rights in the digital era.
And my input would be that technology is just a tool that needs to be shaped by human-centric interventions. So you need people to create risk-based and multi-stakeholder approach to creating value from data. You need people for governance and regulation. You need people for research and innovation for contextually relevant solutions. So essentially, you need people to ensure shared prosperity and equitable wealth distribution from data. And this is crucial to ensure that everyone is represented and included in the digital revolution, and not forgetting the environment as well. Thank you.
Thank you, everyone. And thanks to the panelists and participants again. And a big thank you to Abby and everybody for CFI for all of the hard work in preparing these sessions and making them run so smoothly. Have a great rest of your day, everyone.